The overall vacancy went from 7.5 last quarter to 7.8. So it's kind of what we predicted, which is continuing to increase, but at a slower rate, right?
Yeah.
And I think we predicted by the end of the year we'd be about 8%, and I think we're going to be about there.
Yeah.
Assuming we have another little bit of give backs, more product coming on, and settle the year around probably 8%.
Yeah. Yeah, which is still, historically speaking, it's up from the last couple of years, but
For sure.
It's an okay market. Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor. We're doing a full version today on Q3 review. So let's kind of jump into three facts and an opinion to start, like we always do.
Always.
Lay out the first fact.
Pickleball rage. So pickleball is absorbing some space. Big deal done up north. There's about to be a 100,000 footer in the South Seattle market, inked. And there's several requirements down in the valley. So it's actually a thing. There's a few 100,000 feet of pickleball out there.
Yeah, and we actually get, a fair amount of calls. Not, once every other week or so, or every third week, someone's calling about like, hey, could we put a pickleball facility in there? And obviously, that's a big cost to go put in an operation like that. But you look at like how pickleball is just really blown up, right? Like everybody's playing it.
Yeah. This might be a precursor to the market slow that we're talking about pickleball.
Yeah.
But there is a couple 100,000 feet of relevancy.
Yeah. Do you play?
I do play. My buddy Scott has a court, and we play often there.
I feel like I'd beat you, but anyway,
It's a
I don't play, but
If you don't play, you're not beating me.
Yeah, that's right. So pickleball, that's an interesting and just kind of new thing that's out there.
Yes.
Looking for industrial space.
Well, it is Washington's sport.
home. Yeah, we founded Bainbridge Island, I believe.
Was it Vashon or Bainbridge?
I think it was Bainbridge.
One of the islands.
Whatever.
Yeah. Number two.
Multi-story assets in Seattle are struggling.
Boy, are they.
Yeah.
Yeah, it's unfortunate. We've had a lot of conversations on the podcast, a lot of conversations with people, right? So you got three of them. You got Horton, 65 South Horton, that I don't think has much going on there. I think that building, I've heard it's out for sale as well.
They will sell it they will sell that building.
Yeah. So that thing's been out there a while, nothing going on. And then you've got what I think is a wonderfully designed product that I'm hopeful it's going to get leased. I keep saying it's going to get leased, which is Crow's building, right? That thing is really well designed.
Yeah, the 700,000 footer.
Yeah.
Great location. It's built really well.
Yeah. They were just about to do a deal and then
for
it
half
went
of
elsewhere.
It, Yeah, they went to a different state.
Yeah, so that one's unfortunate. But, so that's widely vacant. And then you got Track 6, which is the oldest of the three. And, it's been out there a ways and a while.
Yeah.
Constructed a couple years ago. I think it's been marketed for 3 years or so and struggling.
Yep.
And so all of them are struggling, unfortunately.
Yeah, that's right. And part of it might be that submarket too. It's just, even though, and we'll get into this, vacancy there went down a little bit.
A little bit, yeah.
But it is still a market that, from a tenant velocity standpoint and depth, it's not great.
Yes.
And then last one, user sales are on the rise, which has kind of helped our volume on the sale front this year.
Yeah.
Although we closed 3 investment sales here in the last 2 weeks.
Yeah.
Which is also really good news.
Yeah, I don't know if you remember this, Billy, but we made a little bet earlier in the year, and I've got those statistics. So coming up, we're going to talk about user sales versus
I'll double down on that bet.
All right, I'm just saying.
I will double down on that.
You got 1 quarter left because I'll let the cat out of the bag. They're leading transactions.
Yeah, users are more than investors. By one. I will bet you whatever you want on that.
All right. And then the last, we always do 3 facts and an opinion. The last one here is landlords will be evaluating their listing teams with great scrutiny due to the length of vacancies, and this is all of us, Bill and I included, right?
Yep.
You've got longer vacancies, slower market, landlords go, do I have the right team?
Correct. And this is when landlords make changes, right?
That's right.
Is when vacancies up and they don't feel like they're seeing every deal, maybe missing some deals. And so certainly when vacancies are up and you have stale listings, we'll see some things, change hands.
For sure.
So those are the 3 facts and opinions. We should talk a little bit about where vacancy is, kind of market quarter over quarter. So South Seattle, went from 8.2% last quarter to 8%. Kent Valley stayed about the same, right around 8%. Came down a little bit, 8.1 to 8%. There was a jump in Pierce County, 7.8 to 8.9, partially because some new product delivered.
That's right. 8.9 we're tracking. Our competition's 9.4, so there's your range.
Yeah.
8.9 to 9.4, depending on who's right. We like to think we're right. But that unfortunately went up. But that, to your point, it went up because of new deliveries, right?
New deliveries,
not because of move-outs.
Correct,
in
yeah.
Pierce County. So positive absorption in the north end, and then obviously new product coming on in the south end. And then let's talk about a little bit about, before we get to the totals here, about specific size ranges. The tightest being 25 to 50 at 4.4% and no change.
Yeah.
This is market wide, by the way, size ranges of vacancy.
Yeah, that, and then 10 to 25 is also low. So basically.
Oh, sorry, you're right. That's lower.
Yeah.
3.8.
10 to 25,000 feet is 3.8. 25 to 50 is 4.4.
Yes.
And those both remained relatively flat from the quarter before.
Yep.
But yeah, there's, unfortunately, in the outlier, on the soft side continues to be the 100 to 200.
Brutal.
Which is now over 10%.
10.1. Up almost 100 bips in one quarter. So that's not what we needed to see in that size range.
Yeah, I mean, there's just a good amount of product that's there, and that's what a lot of our market was built to over the years. So that's why there's just a lot of product in that size range, not as much deal velocity. So that's one that we continue to keep an eye on.
Absolutely.
And you see landlords getting more and more aggressive in that particular space.
More aggressive, trying to figure out how to demise to get into these lower vacancies.
Yeah.
Right.
Yeah, I mean, we did. We demised a 108, worked great, split it down, basically in half. So it gets us out of the 100 range. We got 55,000 feet left, which is
much better range.
Statistically a way better place to be.
Yep. And then the overall, so we're all tracking, the overall vacancy went from 7.5 last quarter to 7.8. So it's kind of what we predicted, which is continuing to increase, but at a slower rate, right?
Yeah.
And I think we predicted by the end of the year we'd be about 8%, and I think we're going to be about there.
Yeah.
Assuming we have another little bit of give backs, more product coming on, and settle the year around probably 8%.
Yeah. Yeah, which is still, historically speaking, it's up from the last couple of years, but
for sure.
It's an okay market.
Yeah. Before we turn that page, total under construction is about 5.6 million feet into this vacancy.
Right.
So
there's some nice deals that were done this year, or this quarter, I should say. So Boeing leased another big, million feet in Bridges project.
That's right.
Which is in Milton. So that was really good news for the market. I mean, a million footer is a deal to celebrate.
Yeah, and that put us in our numbers, and let's talk about the way we do our numbers versus our competition. So with that million footer, we accrue at Colliers, we're the only one that does this. Some clients asked us to do this. We accrue upon signature, as opposed to everybody else accruing and absorbing, I should say, vacancy upon move-in. Okay, so our figures right now, year to date, show us as flat, a positive 20,000 feet. Our competition is going to show a positive 2 million feet, including the bridge deal, this quarter, but settling about 1.3 million feet of positive absorption year to date versus us flatline at just about zero. Yep. And the reason why is some of that stuff down south, Big Fred, that is now absorbing because of move-ins, we recorded back in 23 when the deals were signed.
When the leases were signed.
Right. Yeah. So the difference is we're saying, which is why we think it's a more accurate way to do it. It's very misleading to show that absorption just happened that was signed a year ago or more.
Yeah.
Right. And so that's why we switched it. So we're saying zero, basically, 20,000 feet. And a lot of the competition will be right around that 1.3 to 1.5 number of positive absorption year to date.
Yep. And again, that's just based on how they accrue it, based on how we accrue it.
Nobody's wrong. Just difference of
No, we're right. Yeah, it's more accurate. It tells a better story. Yeah.
So those are the deals, and a couple of them that they're going to record this quarter. Competition would be like Harbor Freight, GE Hair, both at Fred 310. And then, of course, we recorded that last year. And this quarter, we recorded the Boeing deal at Bridge, Milton. And that probably won't occupy this year, maybe? I don't know.
Probably next year.
Maybe it's fourth quarter.
Yeah.
Billing's done.
Stuff seems to just get delayed.
I can't remember what it is.
Yeah.
So that's, I mean, there's a whole lot of deals here, but those are the big ones. Okay, capital markets. We're back, baby. You know?
Yeah.
Almost 870 million in total sales year to date. 45 transactions, and for the listener, Bill and I had a little bet after Q1 because the users were crushing the investors. Investors have surged back. Out of 45 deals though, 23 of them are users for 51%. So I'm still leading with 1 quarter to go. Come on, users.
Fourth quarter is when,
exactly.
We're gonna deals are going to happen.
Yeah, and there's more investors back.
Yeah, and we've seen it on the deals that we have sold. Like you said, we closed on 3 in the last week, all investments to investors, and we'll close on one in the next 30 days.
Yes.
That'll be an investment deal as well. I'm going to win that bet.
You're going to win the bet.
Yeah. But it is a very... It is a really strong user number, for sure.
I didn't go back, and I probably should have, to look at it, but I'll bet it's the strongest user market since 2007-8.
Yeah, I mean, it's been interesting to see just on the capital market side with the stuff that we're selling, because we get as many calls when we bring something out from investors. Everybody wants to know what's going on in the marketplace right now.
Yep.
And hey, we might play on this, we might not. And so you get as many calls, you talk to as many people, and then at the end of the day, the amount of people that write compared to during the COVID years when all the investment demand and everyone was writing.
Going crazy.
Yeah. We end up with 3 to 5 offers is typically what we're seeing, and that's what our competition is seeing as well at the end of the day when you bring something out. So things are settling in. The last few deals that have traded, or you're going to be between a 5 and a 6 cap, depending on Walt and some of the other factors that go into it. But that's where things have settled in so far this year.
That's right.
Yeah.
Agreed.
We're wrapping up Q3. Thoughts as we head into Q4? I mean, I think, and then this isn't, a huge revelation, but fourth quarter investment sales will be good.
Always.
The election and everything that's going on there may have our fourth quarter numbers down a little bit, compared to historic numbers on the volume from an investment side. But I think we're going to see some good activity on the investment side. So we'll close out the year strong on that. And then I think we'll end up, from an absorption standpoint, positive, but it'll be relatively close to just being a pretty flat year.
8%-ish.
Yeah.
Yeah, I agree with all that. I think it's been a rebuilding year from being really down last year, mostly on capital markets. But I feel like things are, in certain segments picking up, and hopefully we just get a surge in the 1 to 200,000 soon.
Yeah, and hopefully we will, to your point. So yeah, Q3's been relatively flat.
Yep.
Hopefully things will pick up a little bit in Q4. We'll end the year with some positive momentum heading into 2025.
That's right. Thank you very much.
Thank you.